Hi, I'm Andy Webb from BeCleverWithYourCash.com. Welcome back to my YouTube channel and welcome back to part 6 of my £1,000 money makeover. We are pretty much halfway there now. Once you finish this, only 6 more to go. And this is all the stuff which will help you make sure when you cut your bills, cut your spending, cut your debts, all these things will make sure you are at least £1,000 better off after a year, maybe even more, okay? Unless you are kind of super savvy and you've done all of these things, fantastic, that's great. But most of you will be able to save a decent amount of cash on most, if not all, of these different videos. If you haven't already, please do hit that subscribe button and that little notification bell that pops up, because then you'll get access to all of my videos as soon as they are released. Now in this episode, episode 6, I'm still focusing on some of those regular bills. I'm going to talk today about insurance. So hang on, stay with me. Don't switch off. I know insurance is probably out of all the different bills the most boring one, but it's very, very important because it is another great way where you can cut down how much you spend every single month and get you closer to that £1,000 total. So insurance is vital. If you have a car, you are legally required to have insurance. If you own your own home, your mortgage lender has probably required you to get buildings insurance. But it makes a hell of a lot of sense to have insurance for all sorts of other things, whether that's travel insurance, contents insurance, pet insurance. Potentially you could have lots of these different policies and they can very, very quickly add up. So if we can trim down how much you spend on a lot of those, maybe even axe some of them, then that's going to be a great way to help you in this part of this money makeover. Now, I'm going to talk quite broadly about all the different types of insurance. Every now and again, chuck in a little bit of a tidbit about specific ones. But this will kind of give you that guidance to look at what you've got and work out, can you bring the cost down and do you need it? So first of all, let's start with that ones. How can you bring the cost down? Now, for pretty much all insurance policies, most of them at least anyway, you'll have something called an excess, okay? If you've got an excess, this basically is the amount of money you pay on every single claim you make. So let's say you have got travel insurance, right? And you're on holiday and you lose your camera, right? And you're able to claim for a new camera, you've got the police report, whatever it is you need. The camera costs £200, but you've got an excess of 50 quid. That basically means you only get £150 back, okay? So you think, oh, why would you want an excess, okay? Surely I just want all the money back. The reason you might want an excess, again, this applies to all sorts of different insurance policies, is the higher the excess, the lower your monthly premium. So that could be a good way to bring the price down. Because the great thing about insurance is it's there if you need it. But a lot of people don't like that because they might never use it, right? And they think, well, I'm wasting this money. But if you do need to have insurance, right, and you have got it and something happens, you will save yourself a huge amount of money on the other side. So it is a bit of a, some people they're anti it, some people are very pro it. But if you want to bring down that premium and you think you can afford a higher excess to make it when you make a claim, then you might want to consider doing that. So that is one way to bring down the cost again of most insurance policies. Also, again, if it's an annual policy, most of the time paying it monthly is going to be more expensive. Most of the time, it's better to pay for upfront for one whole year. And again, home insurance, car insurance, travel insurance often works that way. Not always. I was quite surprised that when I did my home insurance just a few months ago, it worked out the same to do it monthly. So I've done it monthly simply because that means I've got more money in my account every month to earn interest rather than putting it all out ahead of the time at 12 months up front. But do check that because often it does cost you more money. And if you're currently paying monthly when you come to renew, that's one of the things to think about that might bring down the cost. And of course, when you come to renew, never auto-renew. Insurance premiums never get cheaper the next year. There's no loyalty bonus really for this. They will automatically charge you a higher price, okay? It happens, I'm pretty sure, every single time. If it maybe occasionally it doesn't, but most of the time it's going to get more expensive and people just let it roll on and roll on and roll on, okay? And it keeps getting more and more. So as you have, what do you think I'm going to say? With all the other videos so far on bills, I've said the same thing. You need to shop around. Now, most of the time you go to comparison sites. Again, going via cashback sites, as I said, for most of the other bills, might get you a little bit extra money on top of that. There are a few suppliers of insurance who don't go through the comparison sites. So Direct Line and Aviva, they're a couple of the big ones. So you might want to check them separately. But essentially doing that comparison will give you an idea of what's available to you. Now, this is really, really important. Don't go for the cheapest deal. The cheapest one probably doesn't offer you the coverage you need. You want to make sure you're getting the right type of insurance, and then if there's a few of them which offer that, then go for the cheapest one. But if you go for something that's super cheap but doesn't offer you, I don't know, let's say, again, travel insurance is a great one there, it doesn't have cancellation cover. Your flight's cancelled, what's it going to do? It's pointless. Likewise, you might want to have accidental damage. Could be something that you think is really important for you at your home. That's often an add-on you have to pay extra for. It's not there as normal. Again, it might be worth paying that extra money rather than go for a cheaper one which doesn't have it. So you've got to make sure you look at what you're getting. Go through those charts. It's so tedious, it really is. This is one of the ones that does take a little bit longer to kind of get right compared to the other things I've spoken about so far, but it is so worth it, because there's no point spending money on something to find it doesn't give you what you need if you need it. So do read those sort of policy documents, check the value limits, check the exclusions, okay? Now, this is one you might not want to do all your insurance on one weekend. You might want to spread that out over the year, because it is boring. I'm so sorry, it is boring, but it is so worth it, because you don't want to overpay and you don't want to be paying for something you can't use. So that's your kind of the key things you should be thinking about across any of the insurance policies that you have. There are a couple of extra things that's worth sort of helping you bring the price down. And I'll focus here maybe on car and home insurance, because they're the ones that most of us are going to have. Now, with home insurance, it's really, really important here that you don't underinsure your valuables. Okay, really important, because if you do underinsure it, then if you make a claim, they won't necessarily give you the full value every single time. Again, so make sure you've got a decent idea, but don't overinsure either. Okay, because you're going to be paying more for it, aren't you? So take a bit of time to work out how much it would cost to replace everything. But if you do that, that will hopefully bring the price down a little bit on your home insurance. Now, obviously, once you've got these policies that you think look interesting, it is always worth getting in touch with your existing insurer just to see if they will match it or go something a little bit closer to it. Doesn't always happen, but sometimes they're very happy to kind of match a deal. They're very open to haggling a lot of the time. So give them a bell and see what happens. And also, don't leave it too late to do this comparison, this haggling. Research by Money Saving Expert found that roughly around that sort of 3-week mark before your policy expires, for car and home insurance at least, was when you could get the cheapest price. Anything after that, prices start creeping up because they know you haven't got as much time to get it sorted. So bear that in mind. Now, I've got a couple of specific things here to help you save on home and on car insurance. With home insurance, the really important thing you want to do here is make sure you get that amount you're insured for sort of as close as possible to what it actually would be. If you underinsure, there's the risk that if you do have to make a claim, the insurers won't give you the full value back. So say you are 20% undervalued. If you're claiming for something that costs $1,000, they might only give you £800. Okay, so things like that. Plus, you've got the excess on top of that. So bear that in mind. But at the same time, you don't want to over-insure, because you'll pay more money if you're over valuing what the insurance is for. So try and work out exactly what it is, and that could help you get the best price on your home insurance. And again, although I mentioned some of those little extras are useful, you don't want to be paying for outbuildings if you don't have an outbuilding. Okay, so that might be ways to kind of help trim the cost. There are more ways to save on your car insurance to bring that cost down. Now, you can add an extra driver or maybe 2 extra drivers. Bizarrely, that will sometimes bring down the cost of your policy, though it doesn't always. So do check that with and without the extra driver when you're doing that comparison. You might want to consider, particularly for younger drivers, basically call it sort of a black box thing. I think they call it programmatic, and it kind of analyzes your driving and bases your insurance on that. Could bring the price down. And I love this last little trick with car insurance. It's really, really strange, but it happens sometimes. The job title you put in can obviously affect the price that you have to pay for your insurance. But bizarrely, sometimes you may well legitimately be able to describe yourself with 2 or 3, even 4 different job titles, because they never actually, how often when you put in there, do they have your actual job? And you go, well, I guess I'm kind of in marketing, or I guess I'm kind of in this. There's different options and they can have different prices. Okay, so play around with those different job titles. The important thing here is to make sure you do not lie. Okay, so it has to be something that legitimately does describe your job. Okay, if you lie, then the whole thing could be invalid. All right. Similarly, when I mentioned about adding other drivers, you've got to make sure you're not, particularly for younger drivers, you don't do something called fronting, which is where it's a young person is the main driver on the car, but you've put them as a secondary driver, and you're essentially fronting an older, more experienced driver as the main person. Again, that is illegal and it could invalidate any kind of claim you make on your insurance. So all those kind of things will hopefully bring the bill down. Okay, so do check those out. That's really, really important for all your different policies. The next thing I want to look at though is the kind of extra things, because it's very, very possible. And I did this when I was filming the show for Channel 5. I met people and they had all sorts of extra insurances which they didn't really need. So they might have had like extended warranties. Essentially that is an insurance, isn't it? They had kind of gadget insurance, all these different bits and pieces which they didn't need, they didn't use. They're paying all this money out every month. Essentially, what was the point? So for a lot of the time, made them sort of think about what would it cost to replace that item if it went? How often is it likely to get damaged? Is it already covered elsewhere? You know, gadget, you might find that your phone is already insured under your household insurance. You might find when you go on holiday, again, you might find your camera that you've got is covered at home. You don't need it on your travel insurance, so you can slim that down. Whatever it might be, make sure you're not doubling up and make sure you're not paying for things that you don't need. So that's really, really important to think about. In terms of that, having it included elsewhere, you might be able to get, so breakdown cover, travel insurance, gadget insurance, they're the kind of things that often get included in premium bank accounts. Now you're paying here quite a hefty amount every month, 13, 14, 15 quid every month, maybe even more, but you get those insurances included. Now, if you've got annual family insurance, you've got breakdown cover, you've got gadget insurance, separately, you might find it's cheaper to get them in a bundle. So do that comparison as well. And there might be extra features you get with that bank. But at the same time, if you've got them with a bank account and you're not using them, downgrade it to another account, a cheaper account, because you're paying for something that you don't need. Now finally, I just want to touch on a couple of insurance policies that you may or may not have, but they really are worth considering. And they are life insurance and income protection insurance. Now, people think these are more expensive than they are. They're often actually quite affordable, but they can have a significant impact on your finances if something was to go wrong. So income protection is there if you can't work for whatever reason. That money will pay out and help you out until you get back on your feet, maybe through illness or potentially because you're made redundant, whatever it is. If you've got that there, it means your costs are covered and helps you avoid debt, because that's the problem with these things. If you go into debt, it's going to cost you a lot more. And also life insurance is important, particularly if you've got a young family or any kind of family. I think it's really, really important, because if you were to go, particularly if you're the main breadwinner, how's the mortgage going to be paid? How are the bills going to be paid? That will offer you a kind of lump sum that comes through and can clear that stuff and make it easier for people to carry on when you are gone. So have a look at those things. Yes, that's extra costs. So it's not necessarily going towards bringing you that £1,000 worth of savings, but they can be vital. So just want to make sure you think about those things. They're much more important to have something like that, I personally would think, than to have gadget insurance on your mobile phone. So that's it for episode 6. Next week will be the last of the big bills. I'm going to be talking about mortgages, council tax, and it's kind of house-based bills that you might have to pay. Until next time, cheers.